After Friday's mini-budget and a slump in the value of sterling came a nervous weekend for the city. When the markets opened this morning, it was dramatic. The pound falling to its lowest ever level against the dollar before rallying a bit but staying well below last week's level and remaining unstable. If the Chancellor was panicking...
What are you going to do about the turmoil on the markets this morning, sir?
I'm not going to make any comment now.
He wasn't admitting it earlier. But sources pointed to comments on Friday when he'd said, "I'm always calm. Markets move all the time." Things were not so relaxed on trading floors like this one, where senior partner Dan Adams said the Chancellor had failed to calm the markets over the weekend.
While I don't think confidence has been lost, I certainly think it's been shaken. Investors are looking for, it's going to take a lot for that credibility to return.
That effort to reassure began at 4:10, with the Treasury promising a fiscal plan on November the 23rd, including how they would ensure debt is falling as a share of GDP. Then 20 minutes later, this from the Bank of England, a promise that they would not hesitate to change interest rates as necessary to return inflation to the 2% target sustainably in the medium term. The economic turbulence was being felt in a different way in Liverpool, where it was inspiring a new optimism in the Labour Party on the day at their annual conference that Shadow Chancellor Rachel Reeves delivered her speech.
The Chancellor and Prime Minister, meanwhile, resemble two desperate gamblers in a casino, chasing a losing run.
Reeves said her party would invest more in green energy, boost the wages of nurses, not bankers, and reverse at least some of Friday's tax cuts.
The 45p top rate of income tax is coming back.
It is clear that Labour sees this economic turmoil as a game changer politically. There is a new sense of confidence here in Liverpool, a feeling that maybe next time they can win and turn those ideas into reality.
But before the politics, the pain, more expensive holidays, the rising price of imported goods like food, and this.
I think higher interest rates are inevitable. Certainly, if you look at the signal markets are giving, they're pointing to a very sharp increase in interest rates. And perhaps the biggest concern is the effect of the increased interest rate on government debt and on government budget.
And on top of that will be the effect on homeowners with mortgages, who may now struggle to keep their heads above water. Anushka Rastana, News at 10 in Liverpool.